Hello, everyone, and welcome back to the channel. Today, we are looking at a major shift in global markets as oil prices have fallen below 80 US dollars per barrel, while technology stocks weighed heavily on Wall Street, creating a mixed trading session. I'll break down what caused the drop in oil prices, why tech stocks struggled, and what it could mean for investors moving forward. Oil prices experienced a sharp decline, as you saw, with Brent crude falling more than 5% and dropping below the $80 per barrel mark for the first time in months. And the move came after growing optimism surrounding a potential agreement between the United States and Iran that could help restore oil flows through the Strait of Hormuz, one of the world's most important energy shipping routes. So, investors believe that if tensions in the region continue to ease, more oil could enter global markets, increasing supply and helping reduce energy costs. Lower prices are generally good news for consumers because they can eventually lead to lower fuel prices and reduced inflation pressure. However, while falling oil prices provided some relief, Wall Street wasn't entirely in a celebration mode, as you saw from the markets. The Dow Jones Industrial Average rose to another record high, gaining more than 300 points. Meanwhile, the S&P 500 slipped around 0.6%, and the technology-heavy Nasdaq fell roughly 1.2%. So the biggest drag that we are seeing is coming from technology stocks, particularly companies connected to the artificial intelligence boom. And several major chip makers and AI related firms faced selling pressure. Investors appeared to take profits after months of strong gains, leading to declines across parts of the semiconductor sector. So, despite the weakness in tech, other sectors benefited from the drop in oil prices. Transportation companies, which makes sense, airlines, and businesses that rely heavily on fuel often welcome lower energy costs because it can improve profit margins. Investors also viewed cheaper oil as a potential positive for inflation, which remains one of the key concerns for central banks around the world. So, why should everyday investors pay attention to this? Because the relationship between oil prices, inflation, and interest rates is extremely important. When oil prices rise, you see transportation and production costs to increase, which pushes inflation higher. And central banks may then keep interest rates high as well. But when oil prices fall, inflation pressure can ease, giving policymakers more flexibility and potentially supporting economic growth. Whether the big banks reduce interest rates or not is another debate. Now, let's see. So, at the same time, the recent weakness in tech stock reminds investors that even the market's strongest performers can experience pullbacks. After a long rally driven by excitement around artificial intelligence, many traders are reassessing valuation and taking profits. What is the future strategy towards all of this that I have discussed? Investors are now closely watching developments in the Middle East, upcoming economic data, and decisions from the US Federal Reserve. Any confirmation of a lasting agreement between US and Iran could continue to influence oil markets. Meanwhile, comments from Federal Reserve officials could shape expectations for the future interest rates and the market direction. For now, the market is balancing two competing stories: lower oil prices that could help the economy, and technology sector that is facing renewed selling pressure. So that's the latest market update. Do you think oil prices will continue to fall, and will tech stocks bounce back after this pullback? Let me know your thoughts and comments below. If you found this video helpful, please like, subscribe, and turn on notifications so you never miss a market update. Thanks for watching, and I'll see you in the next video.